Subscribe to LearnCab and hit the bell icon to get notified.
हेलो, गुड इवनिंग, नमस्कार. स्वागत है वापस इन आवर लाइव सेशन एंड दिस इज LearnCab's live class which is absolutely free of charge. So let us continue from where we left off. In the meanwhile, let's do a quick recap of forfeiture, last lecture. So let's have a recap of what we learned in the last lecture. Yeah. So we discuss about these entries, and first we discuss this, that what is forfeiture. I'm going to brush through this quickly because this was done in the last session also. So we discussed that the meaning of forfeiture is to take away, right? Forfeiture means taking away. Alright, so I was talking about forfeiture. We are doing a quick recap of what we studied in the last session of mine. We already have done forfeiture of shares. Just for the benefit of those who missed my last session, I'm going to do a quick recap. So what is forfeiture? To forfeit means to take away, to grab, to take it away. And why does a company forfeit the shares of the shareholder? Because if the shareholder fails to pay the call money, then it will result in forfeiture of shares. Now, who will do the forfeiture? The decision will obviously be taken by the board of directors or directors, and they will be empowered by the articles of association. उनको वो अधिकार मिलेगा, they will get that authority, that right from the articles of association. Okay, and then the second thing that we need to remember is whatever amount that shareholder has paid, let's say the shareholder paid application money, allotment money, let's say 2 installments were paid, but he could not pay the call money. So whatever amount was paid by this person will not be refunded. वो वापस नहीं करना है. That will be kept by the company. It will be retained by the company. So for the company, this will be a gain. This paid up amount will be a gain for the company because company is going to keep it with them. Company is not going to refund it. And when we talk about the entry of forfeiture, it is very important to note these 3 amounts: called up amount, unpaid amount, paid up amount, or in short I call it CUP. So the called up amount, unpaid amount and paid up amount are extremely important when we are passing the entry of forfeiture. Let's have a look here. So if the called up value is rupees 8, what is meant by called up? Those who don't know, I'm going to repeat this for you. If you look at the left of your screen on top, you will see application rupees 2, allotment rupees 3 and first call rupees 3. Can you all see that? So this video, whatever you are seeing, I have already written this on the screen because we are doing a recap. So coming back, what is this? W1 is equal to R3. Huh? What is this? This is writing once is equal to reading thrice. So every time I keep saying this, that if you write once, it is as good as reading thrice. So you take good quality running notes. It is very essential. It's very important. Okay. Now, what is meant by called up value? So now, on the date on which you decided to forfeit the shares, the company has asked for till date application 2 rupees, allotment 3 rupees, first call 3 rupees. So that means till date the company has asked for how much? 8 rupees. That's why we say the called up value is rupees 8. Okay. And this individual, Mr. XYZ, whosoever he is, he has not paid the first call money. The first call money is not paid. That means the unpaid value, if you look here where I am marking now, the unpaid value is rupees 3. Called up value is rupees 8. Unpaid is rupees 3. And paid up is rupees 5. Now, the entry, if you have a look, share capital account debited. Please focus here. Share capital is debited because the capital is reducing. Have a look here. I have written the reasons also. Normally capital will have which balance? Credit balance. Here we are reducing the capital, so it will have which effect? Debit effect. Then, so first let's understand why behind the entry, why this is getting debited, why this is getting credited. So capital is getting debited because it is reducing. Calls in arrears is getting credited because we are writing off. We are writing off the arrears. Earlier, I have written this entry also. Earlier, whenever the arrears were recorded, at that time the calls in arrears were debited because that was due, receivable, milna baki hai. That shareholder became our debtor. Then we sent a reminder, then we sent a warning letter. Still that big fellow did not pay. Then we said, okay, fine, now it's time to take away his shares. So now we are taking away the shares, we are forfeiting the shares. Is there any chance of recovering those arrears? Is there any chance of recovering those arrears? Are we ever going to get back those arrears? No. So those arrears are required to be written off. Okay, that is why the calls in arrears account is credited. And sometimes instead of calls in arrears account, we can also credit the call account. But right now let's focus on the calls in arrears. And the last one, forfeited shares account. What is this part? If you remember on the earlier slide I told you, that the amount which has been paid up by the shareholder need not be refunded. We need not refund it. That amount will be confiscated by the company. Company will keep that amount. So this is a gain for the company. It's a gain. So nominal accounts rule, credit all incomes and gains. That is why the forfeited shares account is credited. This is the temporary account. This temporary account will be kept only till decision of reissue is taken. Okay. Now, second thing, if now let's look at the CUP thing. Share capital is debited with which amount? Called up. Called up amount is 8. Calls in arrears with which amount? Unpaid. And forfeited shares with which amount? Paid up. Hope you all understand. Is this entry, all of you attended the last session? I hope I have refreshed your memory. Did you understand? Did you remember all that we discussed last week? Now this entry was correct if the shares had earlier been issued at par. Now what if the shares were issued at premium? If were originally issued at premium. So now when the shares are being forfeited, there are two possibilities. One, if the premium is received, and two, if the premium is not received. Okay. So let us look at this option if the premium has already been received. So if the shares are being forfeited on which the premium has already been received, then you need not touch the premium account at the time of forfeiture. So basically the entry of forfeiture will be the same as what we saw earlier. Share capital account debited, to calls in arrears account, to forfeited shares account. Okay. Now, what if the premium is not received? What if the premium is not received? So if you remember, when the premium amount is made due, let's say I give you the entry of allotment money due. So let's say the allotment money was due, and in the allotment money we had asked for premium. We have discussed this entry before. So share allotment account debited to share capital account to securities premium. So when you made the allotment money due, the premium account was already credited. The premium account had already been credited. But did we receive the amount of premium? We are saying that if the premium is not received. So this particular shareholder, he did not pay the allotment money. Because he did not pay the allotment money, the amount of premium was not received. But we have already credited this premium along with all the shares. But we have not received it. That means when these shares are being forfeited, we will need to cancel this premium also. So in the same entry, the entry remains, you can just remember this entry as forfeiture entry. Share capital account debited because shares are getting cancelled. Then two calls in arrears because arrears are being written off. Two forfeited shares because this is a gain, but if you notice I have kept a gap here. What will be filled in that gap? What will be filled in that gap which you can see there? Why so? Because we want to cancel that much premium. We have not received the premium on these particular shares. Okay? That is why the premium account is being debited. So when your shares were originally issued at premium and later on these shares are being forfeited, there are going to be two possibilities. One, if the premium is received, and two, if the premium is not received. Okay? Everyone? Moving on to reissue of shares. Reissue of forfeited shares. Now, one important thing to note, reissue value cannot be less than unpaid value on those shares. That means whatever amount the earlier shareholder did not pay, at least that much should be recovered from the new shareholder. Why such a condition? Why such a condition? Because the company cannot or shall not suffer a loss at the time of reissue of forfeited shares. Company shall not suffer a loss at the time of reissue. If the company wants to reissue the share, they have to check that at least this much value is recovered from the new shareholder. If it is not possible, then the company shall not reissue. The company will never reissue if they feel that no, we are not going to get that much amount. they will say shares are permanently cancelled. No worries. Okay. Then difference between reissue value and called up value. Those who are getting confused with the terms, I am going to show you 4 different cases. Okay, we will discuss all that. So don't worry, all these terms will become very clear. 22 years I have been teaching, and this apparently was the first topic I ever taught in accounts 22 years back. So whatever I am saying, everything is going to be crystal clear to you. If not now, in the next 5 minutes, don't worry. So difference between reissue value and called up value, I like to call this gap. So if there is a gap, that gap will be filled in with the help of forfeited shares account. Guys, if you remember, in the earlier entry of forfeiture, what did I tell you? That the amount which the earlier shareholder had paid, the company has kept with itself. It's a gain for the company. And I told you it's a temporary account. Why? Because that temporary account is going to be utilized at the time of reissue. How? We are going to learn in the next 5 minutes. Don't worry. And now, when the shares are reissued, if there is any surplus, what is meant by surplus? Again, it's going to come. Surplus after reissue is to be transferred to capital reserve. So how the surplus will be calculated, I am going to show you now. Please be alert. Are you clear on this? So before we go for the reissue entry, we should understand that the base entry is for forfeiture. The forfeiture entry will be the base, and with the help of this entry, we will be going for the various reissue entries. So as we discussed, share capital account debited, I am assuming that the called up value be 7. Okay, I am assuming that the called up value is 7. Let's say the unpaid value is 3. And the forfeited shares 4. So CUP, is that fine? We are assuming that the amount of called up value is 7, the unpaid value is 3, and the paid up value is 4. So this entry is going to be our base. And now we talk about reissue. As I told you, I am going to teach you 4 different cases. So the first, when the reissue value is equal to unpaid value on those shares. So when the shares were forfeited, what was the unpaid value? 3 rupees. Okay, the unpaid value is rupees 3. So we are assuming that when we tried to reissue, we got only the bare minimum. I hope you remember what we discussed here. The reissue value cannot be less than unpaid value. Okay, so here we got only that much response. So that means here we are going to reissue the shares at rupees 3. The reissue value is 3 rupees. So when we are reissuing the shares, we will get money. We will get money, so our bank will receive money. That's why bank account debited 3 rupees. But when we are reissuing the shares, we have to check what is the called up value. Now the called up value is rupees 7. That means the entire share capital is at 7 rupees. So when we reissue these shares which were forfeited, जब हम इसको reissue कर रहे हैं, when we are reissuing them, we have to ensure that our share capital account goes back to rupees 7. We have to ensure that our share capital account goes back to 7. We had debited it with rupees 7, it should go back to rupees 7 unless some other call is made. So we received 3 rupees. So bank is the receiver. That's why bank account debited. The share capital is credited because capital goes up. We have reissued the shares, the capital will again increase. But there is a difference, or as I said, there is a gap of rupees 4. From where will we fill in this gap? From where will this gap be filled? So here the amount will be adjusted from which account? Forfeited shares. So this amount was the gap on reissue. Okay, gap on reissue. So now sometimes some teachers call this loss on reissue, but I am sorry, I don't agree with that, because any which way the Companies Act says reissue cannot be at loss. So calling this loss on reissue would be wrong. We can say this is shortage. Okay, if someone wants, you can say shortage also. Shortage on reissue or gap on reissue. So what was the value of the shares at this time? 7. But we reissued at what price? 3. So how much was shortage? How much was the gap? 4. This was adjusted. See, in this entry, our forfeited shares account was credited, right? Now in the reissue entry, we have debited it. That means the forfeited shares account got closed. The forfeited shares account got closed. Alright, so there is no surplus on reissue. When we reissued the shares, we are left with no surplus. Whatever amount we had confiscated, वो पहले का shareholder से जो amount छीन लिया था, whatever amount we had taken away from him, the entire amount has been put to use. So there is no surplus on reissue. Are we clear on the first case? Or I told you I am going to give you 4 cases. Every time please remember, this is our basic entry. We are going to go back to forfeiture, check that okay, this was the entry for forfeiture, and now what is the entry of reissue. When reissue is equal to called up value on those shares, okay, reissue is equal to called up value. So called up value was rupees 7. So now we have reissued at rupees 7. So the entry on reissue. Now do we need the help of forfeited shares account? There is no gap, there is no shortage. The whole amount is being, yes, we have got the entire amount, 7 rupees. So there is no need, we did not utilize forfeited shares. Okay, I am just going to write the entry in short here also. The entry of forfeiture was share capital 7 to calls in arrears 3 to forfeited shares 4. This is our basic entry of forfeiture, which we wrote on the earlier page. Now, what has happened here is, this amount of 4 rupees has been unutilized. The amount of forfeited shares has been unutilized. We have not touched it. That means this is our surplus. In case anybody is saying, "Ayyo sir, what are you saying? We utilized in the first case." Yes, we did. But then I hope you are paying attention to this. That story is done. That story is gone. That episode is over. Now we have moved on to the next one. and there is an or. So we are going back to this. This is our basic entry. Okay, are you with me? Do you understand this? Then for transfer of unutilized balance of forfeited shares account related to those shares. What does that mean? We have not utilized the balance, this one. Now forfeited shares account is showing which balance here? Credit. Okay, it is credit balance. So now to transfer it, we will have to debit. And this amount will be transferred to capital reserve account. The entire amount is unutilized. Why capital reserve? Because this is a capital gain, right? We all know this is a capital gain. Forfeited shares account, which was credited at the time of forfeiture, is a temporary account. We will hold that account only till the decision of reissue is taken. Once the reissue is done, once the reissue is clear, we will check if there is a surplus. Is there something remaining? Kuch bacha hai, anything remaining unused? If it is, then transfer it to capital reserve. Please remember, in your question paper, they will never ask you to transfer this amount. They will only mention about reissue. The transfer entry will not even be mentioned. You will have to check that when I have reissued, is there any surplus remaining? Is there any unused balance remaining? I always say that this reissue entry comes with a 1+1 offer. 1+1 offer. So with one entry, the other entry is free. Okay. So you will not be told about the transfer entry. You will only be told about the reissue. But you have to make it a point to check that after reissuing, is there any surplus? Is there any unutilized balance which I can transfer to capital reserve? So this was case number 2. Moving on to case number 3. When reissue value is less than called up but more than unpaid. Now if you remember the CUP, our called up value was rupees 7, unpaid 3 and paid up 4. So we are saying that the reissue value is less than 7 but more than 3. So we will just take a random amount, let us say 6 rupees. Let us assume that the reissue was at rupees 6. Is my assumption understood? Okay. So we are assuming that the reissue value is at rupees 6 because our case 3 or C is saying that the reissue value is less than called up, that is less than 7, but more than unpaid, that is more than 3. So we are assuming the amount to be 6. So, okay, entry for reissue. How much will come in our bank account? Okay, 6. But we need to credit the share capital again with how much? Capital has to be credited with the called up value. Capital has to be credited with the called up value. You may reissue at any price. You may reissue at any price. The capital will be credited only with the called up value. That is 7. So now we see there is a gap of rupee 1. There is a gap of rupee 1. This will be adjusted from which account? Yes. Forfeited shares. Okay. Now, how much was Our balance in forfeited shares account 4, the paid up amount. How much was utilized? 1. So the unutilized balance is 4 minus 1, that is 3 rupees. I repeat, we had forfeited, this amount was credited to forfeited shares when we forfeited the shares. Now when we reissued those shares, we reissued at a certain rate in which we had a gap or a shortage of 1 rupee. This 1 rupee was utilized from the forfeited shares. So out of this amount of 4 rupees, we have used 1 rupee. So our unutilized balance is rupees 3. Now that amount will go to capital reserve. Okay. Forfeited shares account related to those shares. By the way, pay attention to this term. Everyone who wants to score good marks and not lose marks in exam, pay attention to this, related to those shares. This will especially be vital at the time of something called as partial reissue. What is partial reissue? That is going to be taken in some other session, not now. Maybe I will take it in my next session. Partial reissue. But remember these words, if you have paid attention, we have mentioned it here also related to those shares, and we have mentioned it in case 2 also. We have mentioned it in, we haven't mentioned it in case 1 because there was nothing free to transfer to capital reserve. Ha ha ha. Me laughing to myself. And now the fourth and the last case. When reissue is more than called up. So our entry of forfeiture, once again the amounts called up 7, unpaid 3, paid up 4. Here he is saying that we reissued at a value higher than called up. So let's assume that the reissue is at rupees 9. Okay. Let's assume the reissue is at rupees 9. Now, how much money will come in our bank account? 9. But how much amount will be credited to share capital? In all the earlier cases, how much was credited to share capital? 7. So even now, capital will be credited only with the called up value. Capital will be credited with the called up value only. Doesn't matter at what price you reissued. You may reissue at higher value, you may reissue at lower value. Capital is going to be credited by called up value itself. So now we have got 2 rupees extra. Whenever we get something extra, which account should be credited? No. No. It is something that I discussed. Huh? Perfect. Brilliant. Very good. So these 2 rupees will be credited to securities premium. Share premium is an outdated term, not used anymore. The new name since last many years is securities premium. So securities premium is a common name which can be used for debentures also and shares also. So guys, once again, we reissued the shares at a value higher than called up value. Our entire share capital is at what price? 7 rupees per share, but we got rupees 9 from the new shareholder. So 2 rupees is our premium. So now, how much is the unutilized balance of forfeited shares? How much amount will be transferred to capital reserve? Tell me. This is what we had forfeited. This amount is not touched at all. So the entire amount will be transferred to capital reserve relating to those shares. In this reissue case, the fourth case, we have not touched forfeited shares balance. I hope you remember our entry of forfeiture was share capital debited 7, 2 calls in arrears 3, 2 forfeited shares 4. Out of this amount, we have not used anything. We have not touched this amount in reissue entry, this. So the entire amount goes to capital reserve. Okay. These 4 cases are completely covering the reissue of shares, all the entries of reissue. There can be variety in calculation that I will teach you later. Okay. So I hope the entries of forfeiture and reissue are done. Have you all understood all the 4 cases? Just a quick recap. So on forfeiture of shares, this is the entry. Capital is debited because it is cancelled, arrears credited because it is written off, and forfeited shares credited because it's a gain. Alright, this entry is passed with 3 amounts: CUP, called up, unpaid, paid up. Then on reissue of forfeited shares, the first case we took when reissue value is equal to unpaid value, that is rupees 3. So we issued the reissued shares which are of rupees 7. At what rate? At rupees 3. So a share of rupees 7 is being reissued at 3. So there is a shortage of rupees 4 which is being adjusted from which account? Forfeited shares. So in the forfeiture entry, this account was credited with rupees 4. Now it is debited with rupees 4. So it is completely utilized. Nothing will be transferred to capital reserve. Whereas the second case, reissue is equal to called up value. So we reissued at rupees 7. Since it is a share of rupees 7 which is reissued at rupees 7, there is no shortage. That is why in this particular entry, forfeited shares account was not used. So the entire amount is unutilized. The complete 4 rupees are transferred to capital reserve. Exactly opposite of case A. Okay. Then case 3, reissue is less than called up but more than unpaid. So less than 7 rupees but more than 3 rupees. So we assume the reissue at rupees 6. Again, the share is worth rupees 7. We are reissuing at rupees 6. So there is a shortage of rupee 1 that will be adjusted from forfeited shares. And then out of 4 rupees we have utilized 1 rupee. So there is a gain or unused balance of rupees 3 that is being transferred. Okay. And the last one, reissue is more than called up value. That means we get something extra, more than what other shareholders have paid, we get from this new shareholder. That is why the 2 rupees are credited to a separate account, securities premium account. And even here in reissue, we have not touched the forfeited shares account. That means the entire balance related to those shares is unutilized. It will go to capital reserve. Done? Any doubts, any queries? I am open for questions. All understood? Thank you so much. Then let's call it off. So please let us know how you are being benefited. You can send us a message, you can reply to the, you can put it in the chat box here or in the next lecture. You may even pass this on to your friends. Normally it is our habit to share bad news. If there is something bad, we tell everyone, oh, this is not good, oh, that is not good. But when there is something good, we don't generally inform others. My only request is, if you are enjoying our session, if you are understanding what our faculties are teaching, kindly share with more people. It is a win-win situation for everyone. We get benefited, we get good students. They get benefited, they get good teachers. You get benefited because both parties give you good blessings. आपको दुआ मिलता है. You get lot of आशीर्वादम. Okay? I hope you understand. So see, I am very frank with my students. When I say you are my students, I am being very upfront and frank with you. This is how I have been for all my years of teaching. I am just a teacher who loves to share a lot of positivity with the world. And thanks to social media and thanks to these sessions, I can reach out to students who are not even in Mumbai. I am sitting here in Mumbai, okay, on the outskirts of Mumbai, and you are there somewhere in South India. Let's make the most of it. Please spread positivity to as many people as you can. The world needs it badly. Okay, and I have made it a mission to inspire as many people as possible. So thank you so much for joining. I will see you in my next session, and please revise whatever you have learned. Okay, we will continue with this reissue thing, but I will teach the full reissue and partial reissue thing. Adios amigos, bye bye. Thank you team. Thank you LearnCab. Thank you my team here. Bye. Good night.
Subscribe to LearnCab and hit the bell icon to get notified.